Harsh, we've got Maneesh Dangi, founder of Macro Mosaic Investing Research, joining in. Maneesh, thanks for taking the time. And I listened with a lot of interest to your conversation that you had with Neeraj on Sunday. And some of the aspects that you spoke about, I think, hold true even today. What you said at the time was, based on the close on Friday, equity in India was a little bit overpriced. That picture has seemingly changed very quickly in the span of a few hours. What's your opinion now, based on the kind of cracks that you've seen in some of these counters? And the other aspect that you spoke about, of course, was that you like India rates and credit. What's your view now?
So equities sort of continue to be very pricey in pockets, where a lot of retail has positioned itself in. A lot of these blue sky scenarios, largely in the small cap space, but in general at a sector level, manufacturing, stuff is priced at obscene valuations, and I guess it's a bad news. Whatever is, even though it's likely that you'll have an NDA government, but a different government and the policy regime would be very different, and that would pave way for a regime which is not going to be very supportive for a lot of these sort of blue sky scenarios that markets were pricing in. So whereas, stuff like private banks, Reliance Industries of the world, many large cap names would perhaps recover. It wouldn't really matter to them as to what form of sort of government, it comes. It's very, very likely there's going to be policy continuity. And of course, there's going to be pain in areas where Modi's push was important for those areas to grow. But most of those sectors are actually have smaller caps and are themes which small investors are invested in. On credit, of course, because of the great balance sheet, Chief, it's very likely that it'll continue to do very well. In fact, I've argued for many months now that credit is a better way to bet on Indian corporate balance sheets than equities. It's far cheaper. And any result comes, it's not going to make a difference to the credits outlook. On rates, unfortunately, if there's a weak Modi setup and with 240 odd seats that BJP gets, it is not a very good news for rates. So while I think that a lot of other levers for lower rates, that is, US rates coming down, India core inflation very low, and fiscal deficit is likely to come down secularly over the next couple of years, would pave way for monetary policy easing, and thereby rate come down. But it's less bullish today than what one could have thought had sort of BJP itself secured to 290 plus. So that's how I would sort of review my Friday calls.
Okay, Manish, that's Friday calls. But talk to us about, what should one look for in terms of macro changes? The rural recovery, the rural push, do you expect more spending from this new government, especially on rural, given the fact that it will likely be a coalition of sorts? Do you therefore believe that the policy shift, what will it be like, and what would therefore benefit from that shift?
So absolutely right. At a political level, you have a coalition government returning. So what we had in last 10 years was an exception to the general rule that India will very likely have over the next 20, 30 years, that you will likely have more and more coalition government. Generally, coalition governments are good for redistribution, good for consumption versus investment, good for rural versus urban. These are sort of big macro cuts. They sometimes work, sometimes don't, but in general, you could, without any other data, you could conclude that a coalition government in next 5 years would be somewhat pro-rural spending. And therefore, I think you're right that areas such as rural spending related, FMCGs, they may end up doing really well. So at market at an aggregate level would still continue to deliver the same that, one would have expected even on Friday or before that. It's just that, what delivers for the market would change. It's likely that, as I said, some of the manufacturing and these thematics, which were sort of exuberantly priced won't deliver. But, old guards, stuff like FMCG, pharma, IT, all of them, will be unaffected. In fact, continue to do well for the different regime that we are in now.
Sure, Manish, sure. So you've spoken about how likely the shift to rural should help.
do you believe that the FMCG or any pockets seem to be reasonably valued to you? Because I understand that market, from a larger market perspective, you still feel it's expensive. But do you therefore believe that any specific pocket which could benefit from this and still is deep value?
No, there's nothing deep value in India. I mean, you really
Sure.
don't get deep value with just 5-7% correction, especially after a decade-long bull market. So there's no deep value. But yes, you're right that IT, pharma, FMCG, and private banks are good to go to places as far as if you were to construct a portfolio today, you would prefer these. Some of them will have tailwind because of the regime change, and some of them will be unaffected. Think of Reliance Industry is totally unaffected because of the results, So therefore, why would you bother? So if you're an investor, look at first principles, look at all the securities that they are there in the markets. Try and prefer large cap versus small and mid caps. Try and prefer segments which are going to be unaffected with Modi or weak Modi. Doesn't matter to some of them. Try and invest in stuff which, let's say, metals, very likely because of the commodity bull market that we are in right now would continue to do okay. As I said, Reliance Industries won't do any worse, irrespective of the form of government we'll have. And same thing you could say for any IT or pharma name. FMCG, I certainly think that is a good rural demand proxy, and given that it actually underdelivered for good 5 years, I think there's a recent case to be made that FMCG would continue to do well for next couple of years.
Manish, purely on the earnings front, and let's keep valuations aside for just a moment. Irrespective of which government comes into power and in what form it comes into power, the reality is that a certain growth in areas like power and infrastructure has to happen based on the kind of direction that we're heading as an economy, as a people. So does that change at all? Does the earnings picture change at all? And what kind of advice would you give to people? So for example, a lot of people who enter, I'm talking about small investors, they've had a secular bull run over the last several years. Does the easy money go out of the window now?
Yeah, so you're right. The earnings trajectory actually don't get altered, but the macro events actually don't change the earning trajectory. They change the multiples and therefore valuation. So you're right that many stocks actually wouldn't, barring unless of course in areas which were sort of particularly driven by, let's say, PLIs or sort of push of what Modi would want you to do. But a lot of these areas are very small in overall markets, so frankly don't matter. So but in aggregate, earnings would continue to sort of chug along, and we will have a 6.5% growth likely, and therefore the kind of earnings you would have expected would have gotten delivered in any case. It's just that the multiple story, it's likely that the foreigners would continue to sort of find more opportunities outside in India than India. And that's the point I said on Friday also, that the global investors would always see many things outside India today far cheaper than what we have to offer.
So then a follow-up.
Similarly for the local.
Sorry, just a follow-up. While you're speaking about the multiples and the valuations, at what point would you be comfortable?
I mean, look, let's see, there is a 10% valuation premium vis-a-vis historical valuations India has offered. Vis-a-vis the bond risk premium, markets are about 15-17% or 20% expensive. Vis-a-vis emerging markets, it's obscenely expensive. Vis-a-vis US, it's of course not expensive. So, there is a different ways to look at multiples. In aggregate, you could say that 10-20% expensive markets. But I want to emphasize this, that it's not in aggregate, markets are very expensive, but in pockets of the markets are extraordinarily expensive. And unfortunately, those are the pockets, which have done extraordinarily well over the last couple of years, 2 or 3 years, most importantly. I think there's going to be pain there. So, 5 years out, if you had a return expectations that market would deliver 10-12%, it would still likely deliver. It's just that what will deliver for you will be different than what you would have thought in your portfolio would deliver.
That's a fair point. Manish, to stay with us, Sandeep Shastri, Director Academics at NITT Education Trust, is joining in. Sandeep, Thanks so much for taking the time and pleasure having you. I'm just curious, as of 10 minutes to 2, and I must admit, looked at the gaps in the several seats that are hotly contested, but my team was telling me 80 seats, as many as 80 seats, the gap is extremely narrow. Do we still continue to see this trend, or can it shift very dramatically in your opinion?
I don't think there would be a major shift at this point of time. The fact that the NDA has a majority, I think, will very much be a reality at the end of the day. The critical question as to how close will the BJP be to the majority mark. My last reading of the situation was it is around 36 seats short of a majority. Now, making up those many seats, I think, will be a challenge as we move towards the final results being out. So you're likely to head towards a NDA government where the BJP does not have a majority on its own, but would be dependent to some extent on its allies within the NDA, who I think at my last reading of the situation were leading in as many as 65 seats. So the non-BJP NDA numbers have gone up as compared to last time. And the BJP numbers within the NDA have seen a slight decline as per the available trends. So the NDA forming the government seems to be more or less a reality. But an NDA government in which BJP does not have a clear majority on its own is what we are likely to see.
Right, Mr. Shastri, that's fairly clear. Thank you so much. Also, I want to try and add to this perspective. What does this do to the dynamic as a whole in terms of policy? Because the BJP has a certain policy agenda. They've been used to driving that by themselves. Now in a coalition government, how does that dynamic change in your view, and what will be those changes in your opinion?
The dynamic will very much change because now, unlike in the last 10 years, in the last 10 years, the allies had what I would call a notional representation in government. But now, because the BJP does not have a majority on its own, if these trends were to continue, then you will have to take the allies into confidence. You will have to give them representation in the cabinet, not just notional representation, but real representation in terms of the numbers they represent. They may even bargain for key portfolios. So all these developments, going back to what happened when Vajpayee was leading the government, would be a scenario which you can well expect. Of course, the BJP and its leadership's bargaining power may be much more superior today. So I'm not ruling out that factor also. And let's remember that the two most important allies who they will have as part of their government would be the TDP led by Chandrababu Naidu and the JDU led by Nitish Kumar. And both these leaders have been part of non-BJP coalitions in the past. And that's another factor we would need to keep in mind. So it would be quite a narrow path that would have to be walked on. There would have to be a consensus on key policy issues before the government takes it forward. So I think all these factors would come into play. We also would need to see that among the others who are there, there are 17 who are there among the others. It will be interesting to see what negotiations can happen with key groups among the 17,
Sure.
and how many of them would be willing to be part of the coalition, or maybe even the BJP able to bring over to their side. So some of these political machinations and strategies will be on in the next few days from the BJP and from within the NDA.
Yes, promises to be a very interesting next week or so at the very least. But let me also welcome on board Deepak Shenoy, founder Capital Mind. Deepak, we've got a broader context of everything that's playing out, but talk to us about impact on markets. the 5% fall on the Nifty justifiable? Are you buying, or are you expecting a larger fall going forward?
Thanks for having me on your show. I think the problem with markets is they expect a certain level of stability. So I think once we get past these elections, we get to a point where there is a government, and if it is deemed to be more stable in nature, then I guess the markets will come back, because the Nifty earnings multiple is actually now about 20 times. So it's not meaningfully high for compared to the past. Of course, there will be some small caps, some areas like PSUs, public sector banks, where I think the feeling is that there's going to be no continuity. But I don't see this as a policy continuity problem. I think it's a stability problem in terms of politics, in terms of who's going to actually take the reins. Is this going to be a coalition government that only survives for a while? Is it going to be a coalition government that is more pakka in nature? I think India has done very well with coalition governments as well as majority governments. So I don't think this is a meaningful problem for the economy right now. But yeah, I mean, I think they're taking it on their chin, because they went up about 3.5% yesterday, so they're down 5% today. So net, it's just 1.5% in 2 days, which is not meaningfully bad, really, for a market that deserves to have this kind of volatility anyway. So I'm not too worried in terms of economic challenges. I think the political stability would be the key thing. When this happens, we don't know, but hopefully it gives us lots of buying opportunities, because that's what markets are good for, right? They will give you panic, and they will give you fear, and they will give you a lot of greed as well. So you're getting the fear element today, and maybe we'll get the greed element again.
Okay, so fear, but the market wisdom suggests that you should go against the grain. Then, Deepak, are you going against the grain?
We are buying. I mean, we don't have much cash in the sense of we run a PMS, so we're almost fully deployed. But yes, I believe that market opportunities like this, look at a 3 to 5 year period going forward. I think these are just opportunities that will come our ways, in bits and pieces. When they come, you have to grab the opportunity in select stocks over time. Sometimes, when sentiments fall, even good companies fall along with the bad companies, right? So you'll be able to buy some of the good companies, maybe reshuffle the portfolio a little bit. I don't see a meaningful change in policy. I don't see a big, the fear would be a big subsidy or a big change in the nature of expenditure of the government. But at this moment, it does not look like that will happen. So keeping that risk in mind, I guess, when you can position your portfolio using a different set of stocks as prices change. Sometimes stocks which were too expensive to buy in the last cycle suddenly become affordable now, so you might be able to shift over to them.
Maneesh, far be it for me to say that this event is over. We're in the midst of it. But having said that, if you zoom out and if you were to look forward to the next major cue, what are you focused on? Is the budget imperative, or is there something that you would watch before that?
I think the only good of this election is that budget to that extent would become, in terms of importance, reduced, especially the capital gain tax, which was a burden in the minds of market. The probability of that would reduce. Almost certainly, the spending would pivot to, as we discussed earlier, towards rural spending and more redistribution, because in some sense it's a little bit of a victory of social justice policies as well. I think the bigger news from outside world is going to be, of course, as and when the US recession arrives. The data there is turning for worse, and a few months out, you may very well have a negative growth outcome, as well as, of course, the political outcome in US, could be more turbulent. Given that we are in a decent, commodity bull market, I only hope that it does not convert into oil bull market. So far, they've been they have not behaved in cohesive manner. But if oil does become an oil bull market, then it could become a pain for India. But otherwise, so far, not much risk from the outside world.
It's benign, and also hopefully with the onset of the monsoons on time, rural economy hopefully will do better this year. But having said that, I'm just curious, Sandeep, you mentioned a few key coalition or alliances, members of the alliance rather, of the NDA. Of course, over the course of the evening, one would assume that several phone calls will go out to ensure that on both sides, the allies stay within the fold. What are the key ones to watch in your opinion?
The two I mentioned, because Chandrababu Naidu will also be coming to power in Andhra on his own, and he will be possibly the ally with the largest number of seats other than the BJP. Then you have the JDU in Bihar. The chief minister met the prime minister yesterday. That may have been in a totally different context and assuming a totally different situation. But today, the JDU would be an important part of the NDA alliance. Also, I think maybe the NDA leadership may want to court the Anna DMK once again, because they are likely to win some seats in Tamil Nadu, and their getting back into the NDA may be something that would be discussed to increase the numbers of the NDA, and also for a little comfort zone for the BJP in terms of the allies they would like to deal with. Because as I said earlier, now, if the BJP doesn't have a majority on its own, the allies would not be satisfied with a notional representation. They would demand seats as per their numerical strength, and also demand key portfolios, keeping in mind
that question. In
strength.
fact, what in your opinion will be that shift, if at all, that will take place in key portfolios here? What, according to you, will the allies demand?
The two major allies, I'm sure, will demand a key economic portfolio, as was done in the past. So, and that would, how much will that be conceded will also depend upon the negotiating strategies which the BJP comes up with. One has seen in the last 10 years that the BJP leadership has tremendous skills of getting their allies and getting those who are not their allies also to be able to back them, especially when the repealing of Article 370 happened. You did have the leadership managing to get a lot of those who were not even part of your support group to be on your side. So a lot will depend upon, in the next few days, the type of negotiation skills that the BJP leadership adopts to be able to ensure that the BJP, even without a majority, would be able to take their key agenda points forward. Because without that assurance, it then becomes very difficult for the BJP to fulfill on the key promises they have made, be it implementing uniform civil code, be it on one nation, one poll, or be it on other reforms that they have proposed as part of their preparation for this election.
Deepak, let me come to you. Quick last take. You suggested that you're pretty much fully invested in equity markets, especially through the PMS. What, if at all, were your last buys? Because, of course, markets have fallen a bit. So those would largely stay valid. That's my first part. Second, if you can give us a quick take on PSUs, because that's the one big casualty in the market today.
Yeah, so I think some of the among the stocks we've bought a bunch of companies in the defense area and semiconductors, companies in the healthcare, railways and defense companies. Some of whom happen to be primarily PSU. Some of them are equipment manufacturers that supply to the railways and defense industries. But in general, the idea here would be simple from my perspective. Are we reaching a point where some of the policies of the earlier government would be reversed or changed meaningfully? I don't think the answer is meaningfully yes to that. For one, the government coffers are actually quite full, and their ability to do a lot of things now, including apart from the regular taxation collections, they also have a much higher collection from the RBI this year, potentially next year as well, simply because of the structure of it. So I think from that perspective, we will see a bit of a change in how how the government finances are, but should not be so meaningful that it affects PSU dynamics, especially defense and railways and all of those pieces. Those are more or less reforms that I don't think will change. Even the power sector, much of it's from the PSU sector itself. So I think you should analyze the PSUs more from a perspective of have their fundamental economics changed meaningfully based on this government or based on this election. I personally don't think so, but of course facts will change. So we'll change our mind if things change.
Yeah. Absolutely. Deepak, as well as everybody who's joined in, Maneesh as well as Sandeep, thank you so much for taking the time and for speaking to us on NDTV Profit.